All right, guys, I'm going to do a recap quickly on the trade that we did. The market was gapping up really well, and market was gapping up really well. I traded NIO 3 times, and 2 of them was really good, and 1 of them was an immature trade that I want to talk about. So that's the second trade. That's the third trade, and that's the first trade that I did. So at the open, it was really gapping up, moved up, went a little bit higher, and then it really sold off. I didn't take it to the 1 minute opening range breakdown. Why? Because stock was gapping up, like in that time was like 7-10%. I really didn't want to take it to the short side. It did sold off really well though. But by the way, another thing, NIO didn't have any volume for 3 minutes, and I know NIO usually takes a little bit of time to really the volume comes in, and I was waiting for the volume, and eventually volume came in minute number 4, and it was just struggling through these moving averages, and eventually a big drop happened. And I decided to take a fallen angel. Fallen angel is a stock that's gapped up, and you want to take sells off at the open, and you eventually want to take a long on it. But I took it a little bit premature because I should have waited until see a double bottom or some sort of a sign of a bounce. So I just popped in right as soon as I saw a new 1 minute high, but that's usually not a good idea, because what's happening here is that you don't expect a V reversal on that. You have to see some sort of a double bottom. That's the Brian TradeBook on double bottom. So in this particular case, I should have waited. So the first trade was really mature. I went long just below the VWAP for hopefully that maybe we can get above the VWAP, but that's usually not going to happen. You have to wait until you see this round double bottom, you see a test of new lows, and then you go up. So at first trade I really didn't have any. It's just very emotional trade, not emotional, just impulsive trade, and I got stopped out on it. But now after that, what we noticed that was we on the 1 minute chart we found this double bottom. The stock was gapping up really well. Actually, let me remove this one. The stock was gapping up really well, and had the potential of a fallen angel trade. And I'm going to work on my trade book on the fallen angel and see if we can get a better one or not. And then that's why after we hold it, you see these signals on the price action that we are holding this 43 as a potential support level. I went long, added more, and eventually we got this pop that I was expecting to get so yeah, that's my whole second trade. So eventually I got this. Let me see if I can use this. Oh, I have to upgrade. Oh, damn. I was going actually to use a triangle, but it says that you have to upgrade. Yeah, I think I got upgrade, but anyways. So yeah, so that the second trade was really good. So actually, the second trade was really good. I had the confirmation of the double bottom, added, and popped up. That's essentially what I wanted to get. Some sort of a 2-to-1, 3-to-1 risk to reward, and I got it. And then came back, lost the VWAP, and I got out completely off it. The third trade was really better actually. So I really liked the third trade. So the third trade, we did pop up above, we did squeeze up above the VWAP. And then I went long, so I saw that we already, passing through all of these moving averages. There is no resistance, as you see. After we pass these moving averages, there's really no resistance. I went long, and this is what I discussed in the chat as well, that I added more on the way up for the break of 44, because we saw a huge ask at 44. On the way up, continually added up, build a huge position. Now that you have a huge position, a pop above 44 would have been a really nice profit, and it did. Instead of scaling out too early, I just added up. I knew that it's not going to go too high of the day, because high of the day was just way above, and there's no way that this one can goes up like this. So eventually, sold off for a decent profit, and then it dropped back, and I got out at the break-even point. So that was a really pretty solid trade on it. Same thing happened with the XPEF. I was hoping to get a trade like XPEF. XPEF is also a Chinese thing, see? But this one actually was a little bit nicer because, it held really these moving averages. And I really like Fallen Angel when you have these moving averages as a potential support. See? It really held these moving averages. Again, XPEF trades very similar to NIO because both of them are Chinese electric, company and stuff. So you see 3 minutes, there's no volume. And really hold this through this 5, you have the support everywhere. And if I see it coming, someone mentioned in the chat, look at this huge move that it did. I was expecting NIO to do something like that, but the problem is NIO opened much higher. sold off, and then this move back was just a little bit unreasonable. So that's why we really didn't get that move much significantly higher. PLTR did some PLTR thing to me again. It was gapping up. Unfortunately, I lost money on it. So, sold off. PLTR is really hard to trade. I love the volume and order flow on that, but it's really hard to trade. It's squeezed above on the pullback. I really liked it, like an ABCD pattern. I bought at 26. I was hoping to get to the break of high of the day. Sold some, and then it dropped on me. I didn't see this drop, unfortunately. I got stuck on this drop. Came back up. I thought maybe this is a time to add more. I added a little bit more. Eventually, I got stopped out. It hold these levels, and I added a little bit more, but this trade really didn't do anything. So Sammy is asking a good question, that why didn't you go all out on NIO? So the reason that I didn't go all out on NIO on the 44, well, I was out a significant portion of my position because now I had a huge position. I got out significant portion of position, but I might have like 30% of my position left on it. The reason for that was I was hoping that maybe we can get a consolidation and we get another push higher. That was my hope, that maybe you get another push higher like XPEV. Let me bring XPEV here. So I really was hoping to get a better, nicer push like XPEV. Let me bring the 1 minute chart. That's exactly, I was hoping that, at 44, I was hoping that we get something like that. Where you come here, you get some sort of consolidation and then another push up. Obviously you can't go up never, but I was hoping that maybe this becomes a consolidation point, exactly like this point on XPEV, and then we can get another push higher. And that's how you do. You never can catch the top and bottom. You always have to. That's why you partial, and partialing is now significantly easier with the free commissions or per share based commissions. So other than that, it's pretty good. So I'm holding some ARC, TNA, and TQQ. I'm still down on TQQ, getting really impatient with it, but I hold it through all of those big sell-off on the tech, and I'm just going to hold it a little bit more on that. ARC is the ETF of Cathie Wood fund, the ARC Innovation, that she's looking for very, 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 emerging companies. She has actually a really, really good website. We use it a lot. Ardi at P Capital, we really use ARC. They publish their free research. It's actually really, really good. So let me actually show that to you. ARC Invest, yeah. So it's actually a really good, website. They have a research center. For P Capital, we really use this research center. I mean, I recommend you guys go. They have podcasts, they have articles, white papers, newsletters. They do a really good job in explaining what they're buying and why they're buying. So I have this ARC just for fun, and see if it's 500 shares. You see, I sold it a couple of times. My average was 107. When I was traveling, I saw that ARC has. I got really, really beaten up ARC. So I decided to just get some. As you see, a really, really big sell-off. And the reason that it's sell-off is really emerging technologies, and it's really, really good emerging companies are in there. And she explains, she has a really good podcast and stuff. So Cathie Wood was one of the persons, I actually bought it right in the bottom. So Cathie Wood is one of those persons that she was believing that this big sell-off is a buying opportunity, and she was kind of right, because IWM really did a new all-time high, and you can't have a broken economy when one sector is making all-time high, like Dow Jones or IWM or Aspire near all-time high, and the tech sector is selling up. And she was believing that that's a really good buying opportunity, and I hope she's right. Anyways, that's a good discussion. Depends on Joe is asking a question, what percentage for the ad is better? I mean, it really depends on your share size and account size and everything. I can't really comment on that, unfortunately, but you can double up when you're adding. When the moves starts in your favor, you can double up, or constantly. But for partial, you also have to see what kind of trader you are. IWM is making highs. I got out of my TNA, but I should have bought some TNA down there.
Yeah, it really kind of pulled back and did that really harsh pullback.
Yeah.
And it's bounced right back now.
Yeah, it's so bad, man. Anyways, Regardless, all right, guys. Well, thank you so much for that. And what today is it? Is it Wednesday?
Thursday.
Thursday. Yeah. Who's counting? So Thursday. Today we have the mentorship session, guys. With mentorship sessions with our buddy Thor. I respect him a lot. He's a really good trader. So see you all in the webinar room, guys. Cheers, guys. Brian, anything from you? Nothing.
I just a few nothing shorts on a JD, late short on it. Oracle, CELH. Pretty much all shorts today.
Yeah, it was a good rate for short. Anyways, guys, thank you so much for YouTube. Thanks for watching, and see you all tomorrow morning in the chat. If not into webinar room tonight for a mentorship session. Cheers, guys. All right, so I'm gonna stop.